Martin from Edge, the channel for learning about trading and investing. Welcome to another new episode of Markets. Next week, the weekly stock market analysis and outlook show that we have every weekend. So this is basically a technical analysis on what happened the previous week, and then try to learn something from it, and then plan for a better trading plan for the next week. That's starting on December 26th, Tuesday 2023. For that, wish you all a Merry Christmas and a Happy New Year. So let's, by the way, if you're not subscribed, subscribe and share to friends and colleagues so that it reaches out to maximum. Thank you. So here we go. Here's the weekly view that we have. We know that there is a couple handle breakout, there is a flag breakout, 1, 2 flags, so 3 flags breakout is what you're seeing very clearly on both indices. Absolutely not out of that. This is a trend line channel, that has been there for long on both indices, and now you can see that it's on the very top of that, and then we have it right there. This is the daily view. Daily view is showing the vertical up moves and then the small consolidation that's happening on the top. Candlestick patterns on the weekly shows that this is more or less a spinning top. Right? This is negative nature. It's at the very top of the rally, and it's confirmed if it reaches the low of the candle below 21,000 or 20,950. That's previous day's low. Yeah, so it's a negative, and it's also a pause after 7 weeks of green bullish up move of nearly 13% of Nifty and nearly 2.5% of the Bank Nifty. Right? Bank Nifty was consecutively 4 weeks of up move, big wide range candles, especially the last 3 ones, and then we have a pause, and this looks more like a hammer, not exactly a hammer. Hammer should have some more small body, but considering the width of that candle, probably half of that. A bigger hammer red, but that's on the top. Again, this is bearish in nature, and it's consolidating because it's an inside bar inside the previous candle's low, and that way it's consolidating as well. It could turn negative, moves below the previous weekly candle's low. So there is a pause after a long time, is what candlesticks are saying, and that's at the very, very top. Now intraday, the daily candlesticks, if you see, it was very volatile. Look at this. It was a V-shape, an inverted V-shape down move, and a V-shaped recovery, half of that. Right? So absolute chaos, volatile, and that's happening at the top. That's where the congestion starts, and that's exactly what you see on the candlesticks. And the last candle on Nifty is actually, it's green but a small body, but it's red on the Bank Nifty and Friday's close. Here also you see the volatility of an inverted V and a V shape, right? That's happening at both upside and downside, so it's very volatile. That finally ended up with a negative close, and Bank Nifty daily also is negative close. So that way, short term, Bank Nifty is slightly negative than the Nifty. Here we go, Bollinger Bands. So the expansion has halted. Clearly, in the Bank Nifty, you can see the contraction has begun with a very huge difference from the moving average. Right, that's dangerous. The further it is away from the moving average, more likely that it is closer. So the bands are too much high from the moving average or median of the band. That way, it's slightly expected to be more volatile, like it happened last week. But expansion has halted. The beginning of a contraction can be seen. That means some sideways consolidations with high volatility can be expected as well. Bollinger Bands on the short-term daily are showing. Let's look at the levels. So this is kind of a consolidation. So there was a consolidation prior to the Fed rate outcome, and once it is block out, and then there is another consolidation that is happening since last week. Now this consolidation breach, if it moves below this 23 expansion, 23 natural increasement or moving average that's coming close by at 28.50 to 8.60 so on. So if that is breached, then this consolidation can breach equal to the height of that box, or it could ultimately make a new all-time high and move as far as the height of this, like right, 600 points up. That's how it is. So the first resistance will come in at 21,591 and 600. That's all. It's an all-time high as well. After that, 21,700, 800, till 22,000 running number is where the resistance upside, because it's uncharted and we are on the top of the channel, and in fact even when as much as about 78.6 of the Fibonacci extension as well. So downside supports major requirement at 21,000 rounding number, and this 20 Fibonacci levels, and then the moving average, the influences of all that. So 28,852, 21,000 is a zone of support. So if that is breached, then we come to the next support. It's 2,700. It's a gap resistance. There also there is a confluence of the 50 Fibonacci extension that's coming at close by. So also 20,600, 400 and all that, right? Then 300 is where the 50 exponential. That's it. It is a gap also coming very close by at 2,300. Same confluence. So once if the 2,700 gap is breached, the next supports can be seen at 2,300. That's all. That's how far it can go for a week, probably max. Right. So that's how it's on the Nifty, on the support zones in the Bank Nifty. Then it's the same. It's on the top of the channel. It is at the Fibonacci 78.6 extension, and it is very volatile with V shapes and inverted V shapes. It's happening at the very top, finally closing right, a little more weaker than Nifty. So the first resistance will be 48,219. That's and plus the 48,000 rounding number, that zones, and then 48,500 will be the next after that. If it managed to break out from the consolidation box on the upper side. Downside, the immediate support will come in at the box bottom, which is the previous day. So the Thursday's candle low, and that's coming in confluence with the 46,700, the Fibonacci, the 20 exponential moving average, and also a gap is coming at 46,500. So 46,500 is to 46,750 or 46,800 is a confluence. So that 300 points, 46,500 to 46,800 is a very good support zone if you can play around with that. If that is breached, 46,500 is breached, then we have a problem. You can find the next support at 46,000 rounding number, and then it can go to the 50 exponential moving average. That's at 45,500 nearby zones. So that's 500,000 points from the 20 exponential moving average. So that's what. So 46,500 is a very good support. 46K is next, and 45,500 is the next. That's how it's up for us. Retracement if it don't happen, suppose at the end downside. The Bank Nifty upside we already seen it can be 48. Resistance first 48,200, 48,300, 400, up to 49,000 it can go resistance. See if it manages to break out on the upside. Downside we already seen it can go up to 45,500. That's for the next week. So that's about support resistance. Now we move on to see the momentum and the trend. The weekly charts are there on the left side, which is for the Nifty, and the Bank Nifty weekly right side. So our momentum has dipped, of course, but it is still bullish on both. Absolutely still bullish on both time frames, both glasses. Momentum is, nothing has happened. It is intact. In fact, it has formed a divergence on the short term. Daily there is a divergence which is positive reverse divergence and is bullish in nature on the Bank Nifty. Bank Nifty, there is a possibility that it can bounce up as much as the height of the previous swing high side. Swing high is close. So Bank Nifty has got a divergence. So that's also bullish momentum itself, but there is a dip that has obviously taken. So this is how it summarizes it. 15. Medium term it's falling, but short term it's rising. Bank Nifty, medium term it's falling, but in the short term also it's falling, slightly more weaker, but it's all falling and rising in the bullish zone. The very external indicator is the DMI positive zones, no proud out of where it's bullish itself on both time frames and both the license Nifty and Nifty. So it is slightly falling on the short term in the case of Nifty, and slightly falling on the short term in the case of Bank Nifty as well. Right. So, but the medium term, the trend is good. Medium term trend is good. Short term, small fall has happened. So, the trend indicator is very good. Momentum trend is intact in both zones. That's a summary of both rises on both time frames. No problems there. Also, there is a dip that we have definitely admit. Moving ahead, we are trying to analyze the volatility with the India VIX. India VIX has spiked up another 4.3%. That's 13.7. That's a good amount of activity. Look at where it is. It's a huge spike. Market is moving up big time, and then look at where the VIX is. Probably that week was supposed to have cooled off when the election outcome comes, when the initial breakout happened. It didn't happen. Then the Fed index happened. Market further broke out, but nothing happened. The VIX was spiking up, spiking up. In fact, it went to hit 15, right? Very close by 20. Another 5 points, it's 20, and it's danger mark. So it's not cooling off enough is a factor to keep cautious. So probably this vertical moves that happen, not a trending move. There's a vertical move, breakout move, sudden quick, sudden two multiple breakouts in 1 month. That were at the end of the year. That is what the fear is all about. So people expect the market. So that fear is what is reflecting in the VIX. So we're cautious about that. Now coming to the implied volatility of the VIX versus the realized actual volatility that you feel. The difference between the spread is 25%. It was 30, it was okay, but now the probability of the option sellers make money is slightly reduced. So we're cautious about that. It's volatile. The Bollinger Bands have shown the difference between the median and the top of the band. So it will very volatile. It will get closer towards ready made. It will again, buy on dips and go ups and downs. So unless that skews happens properly, the contraction is turned to the Bollinger Band skews. That is when the volatility will be less, right? Then sideways movement, option sellers gain. But now it is heavily volatile. It's going to be heavy volatile, although the beginning of the consolidation has happened. So now the last expiry of the year, 2023, that's December 28th, it's a monthly expiry, and we have the option futures or open interest showing that it's long built up on 50, last one, Friday, and Bank Nifty is long and wide, so slightly contradicting, slightly weaker Bank Nifty is what you see there. Put call ratio is also slightly weak. Bank Nifty less than 1.93 is not bullish enough, but Nifty is much more stronger with the put call ratio 1.12. So Nifty showing strength as far as the open interest of options and futures are concerned. Look at the levels. 21,000 and 22,000 is for the highest put and call rating seen. That's where the support interest is seen. Next level of support is at 20,000 and 21,500. So it's a 1,000 points range. It's not a small range, so it's a wider range relatively. Those VIX has spiked towards the 14, 15 that zones. And if you also 45,000 and 40,000, even wider range. So what riders are seeing that the volatility can span from 45 to 48, peak, where the highest put and call rating is there. Right? Wider range, 3,000 points range. Second highest put and call rating is there, 46,000 and 50,000. So wide volatility is expanded in Bank Nifty is what option call riders are saying. PCI and futures options are contradicting the respective 15 Bank Nifty. Already seen that. Right? That's what open interest has is showing us. Let's move ahead and see what the industrial sectors, what occurs we have. So across the different major industrial sectors that's listed down here that contribute next to the index, it has got it got slightly hit right last week. It was 0.5% down on IT, 1% down on metal, and 1.5% down on auto, and FMCG also 1.5% down, realty also 0.5% down. So overall hit, but not that bad. The only sector that gained was pharma sector that moved up. The only sector now that is remaining in slightly non-bullish zone is the auto sector, which just slipped to the sideways zones in the short term, right? But it's medium term that bullish itself. Otherwise, all other sectors are still bullish with respect to the momentum of the medium term and the short term. So you can place it; it's still there. That's what the momentum indicators are saying. So let's quickly see the charts of those. IT sector, in fact, taking out the gap. After a long time, it was a very long gap, and it was taken out, and then it's breaking out, and then it's all the way up. Now it was bullish, absolutely trend is bullish. Metal, it's a inward head and shoulder breakout that has confirmed with bullish momentum and trend. Auto, on the top of channels, interest has come in play, but bullish momentum divergence could come in after some more time. But yeah, medium term slightly got hit too. Negative momentum slightly. So that's only sector that's showing shorter momentum dip into the sideways. Pharma is on the top all-time highs, bullish momentum trend breakout. Right. Bullish momentum trend. FMCG also the top of the trend, and of course there also just like the auto. But previous week was great, super breaking out. Some more space left to the top of the brown part. So we can expect really that much of movement that happened towards the top of the trend and chat, but momentum trend bullish, absolute all-time high levels. Reality also some more space is left to us, but last week was kind of hammer at the top, so be cautious slightly because hammer can be controlled to falls below the price low of the previous week's and but moment is bullish, trend is bullish, absolutely, no doubt. Slightly weaker is only auto. That too, nothing is wrong in the medium term. So all the sectors bullish, momentum is what you see in and trend is what you see in nutshell. So the markets are very top and being very volatile. Coming to the industry heavyweights, the few stocks, five stocks, critic stocks, what do we call that contributed maximum to the biggest HDFC Bank is consolidated since very long time. It has been moving up after taking a support of the trend line or the ascending wedge. It has been heading towards the all-time high levels at 1,700 plus. But the resistance is there. It is climbing the bull zones. If this breakout happens, HDFC contributes a lot, probably 15%, 0.15%, 15% or something. Towards the index. So if the breakout, if it all happens, it will be weak. But there is also a probability that it close and then once again go back to the norm. So let be cautious, but moment is bullish, trend is bullish. Price action also seems to be very bullish, but heading towards it very close to the upside. Cautious. Cautious or bullish basically. Lens. Absolute bullish momentum trend and similar to the HDFC, this has closed above that consolidation zone of the box, and if the price moves over pre scan high, then probably this can give big moves, yeah, because this is a very long consolidation of 2 years. That seems to bring out if it happens. Momentum and trend indicators are showing positions. ICICI Bank very close to the top of the channel, where the new all-time high is made, but previous week's candle is bearish. Well, it was slightly slipped to the bearish zone. It's not confirmed yet. It will be confirmed next week. So slightly cautious there, but yeah, there is. If the bank sector is recovering, then there is a chance. Otherwise, it can go back to the bottom of the. If the median of the parallel channel is breached, it can go to the bottom. Otherwise, it can take a support at the median. But momentum bullish, trend bullish, and slightly similar to the sideways. You have to be cautious on that in medium term. So that's ICICI Bank, Reliance, and HDFC Bank. Now, what you have got is two IT stocks that contribute maximum. Infosys feeling some resistance before the gap. That's at 1750, right? So that's where the struggle is going to be. If that is taken out, then this will be parallel channel breakout as well as a gap breakout. So it will be big move if it happens. This is already proposed that flag pattern, and then there's some resistance at previous highs, but it seems to be strong bullish momentum and trend. TCS and Infos also bullish trend and momentum, everything except this gap resistance at 70,000 for 50 zones. Right. Like bank as usual is going up and down, or slightly picked up, but still in the sideways. ITC had slipped in the and taken a very shift of momentum. It's very bullish in nature. It's a flag pattern also. So if a breakout happens from the top of that channel, then it can be really nice as much as the height of that flag. Means the pole of that flag. Yeah. Only is bullish after all. So only sector that's not bullish at is Konak Bank. Others are all bullish. So across the industry sectors there is bullishness. All are bullish. ICICI Konak Bank slight trouble with the momentum on the medium term, but otherwise we have leaders of heavy weights which are driving even when the Fyers have been selling last week. Right. That's what industry sector analysis and heavyweight participant stocks analysis. So institutional participation fee, if you see Fyers has been selling 5,420 crores. That's disappointing. We had 4 consecutive weeks of buying, but big selling on the last week before going to holidays. But DAs were made up for that and bought double of 9,000 crores of buying. So that's what kept them on the top, and that's what created the volatility last week. And heavy buying by DIs, heavy selling by Fyers. After 4 weeks of continuous buying with Fyers, so slightly disappointing there. DI is a mutual fund money that's coming in this balance in there. So net derivatives longs on the FI side also was kind of flattish. Right. That's the story. So hopefully DI is going to come back from vacation, then move the market, but probably not next week. Next week is probably it's going to be flattish. Any kind of buying may not be happening from the FI side. Probably from DI side. They come in and then we keep the market consolidate on the top. Having looked at all that, let's come to see some of the global market commodities, currencies, and the US indices. Right. So dollar index has cooled off. The slip from the neckline of that cup and handle breakout. So that's kind of really cooling off. So it's nearly 1% down. It's 101.7. And the momentum is bearish. It's called in the bearish zone. So dollar is really cooling off. One way it's good for the markets. Currency pair has not gained much, although 0.15% of up moves happened. No, actually, it has gone the other way. 0.15% of up moves happened. So 83 it's now. So absolutely nothing has happened despite the fact. There's no correlation between these two, but still, despite the fact that the dollar has crashed, the currency market seems to be having a weak rupee that's remaining there since a very, very long at the top of that ascending wedge. That's very sad. Crude oil, 2% up. The crude oil has fallen, in fact, below 70 also. Now that there is some news of some ships, crude oil ships expense because of terrorist attack or something. So because of that news of crude oil price has spiked up at 73.4. When it has climbed from the bearish zones to the sideways. That's not great news, because it had risen to the top of 40% hike to 90 plus. Now it has fallen to 70 below. And it again spiked. So it has begun spiking and climbed from bearish to bottom. It's a bit of worry for an economy, like I was embodying mostly crude, right? So not a great story for crude right now. The short term for this week. Gold is buying up. It's already to come down. It's consolidating after making all-time high. Profit booking has happened, so it's still, it's rising and climbed into the bull zone. So gold is still there. And gold is, remember, keep in mind when gold is spiking up, always be cautious that the market is shifting the money for a heavy safe environment. Right. This time when the market movement didn't happen, exactly, it did not coincide. But yeah, once again it seems gold green and then making all-time highs, heading towards that at least. You're not seeing the charts of those. So here we go. It's a gold. It's an oil on the left side, right? We had a 40% up move, then we have almost that much 30% down move, and then we have taken a support here, and then climbing back. And it has dipped into the zones, climbing back. Gold, very all-time high, selling pressure, climbing back. Once again heading towards all-time high. Climbed back into bull zones, gold. Now, the US indices, the mother market, Dow Jones, broke out, no all-time highs, right, this week. Right, so 6, 7, 8 weeks of continuous up move, and then we have a small bullish candle, but a small body. Moment is absolutely bullish, no doubt about that. Nasdaq also all-time highs, breaking out of the descending wedge, and then absolute bullish since several surges. Another week of green closing has been defined as with bullish momentum, bullish trend on all the indices. US markets close green despite the fact that it is the end of the year. Two topics. So before that, let's just conclude this fact, right? So all of you see, not a cooled up, but that's not reflecting the rupee. Crude oil has spiked once again. It's a little point of worry, but it's okay. It's under control. Gold is not ready to. It's a hedge instruments on the top. Consolidate, not ready to come down. US markets has plans to close green before going to the holidays. All green there. It's coinciding with what our markets are doing. Coming back to stock picks, actionables. Two topics: Tata Consumer Products, W pattern, double bottom, rectangular box breakout. So all it now. Already it has moved. It has not met the targets. Still there is space for a reasonable risk reward trade because the momentum is trend. Momentum is bullish. Trend is bullish. Price action is still there, not at the target, and that's it. Long way to go. Yeah, it's a short-term trade. Couple of weeks. Otherwise, put tight stop loss below the entry candles low. Around the Sun network, this rounding pattern is a very long one. If you get a chance to price more over the last week's candle high entry, and then you can have good reasonable risk reward up till the next previous all-time high. Volumes are just not that great, but spikes. It has not spiked over the simple moving average, but over the moment, over the trend. Absolute bullish price pattern also is in favor. Probably it may face resistance and then pull back to make a cup and handle. That way, you'll have to wait. But if the price moves above the price candle, week's candle high, then Probably ground pattern breakout, cup pattern breakout is what's happening. You have to wait. It's not a ready trade. Enter only if the price moves above the previous candle's high. And that's a two-stock fixed at a consumer products and Sun TV network, both on the long side. Another pick from the indices. This is known as a Batman strategy, completely hedged on both sides. Basically, we are selling ODM call, ODM put, and then taking inside hedge by buying them. Options of put and calls, buying inside hedge, and also taking an outside hedge to cover and make it balanced completely. Hedged. Hold is good. POP is good. RiskReward may be good if they were not holding on to the last day. Very buoyant trade, that's the beauty of that, right? So this is matching with our range that charts are saying, right? It's not like to reach the 2900, it's not like to go above 21,700. So if it remains there, we make a reasonable profit, right? So the capacity, risk capacity determines how much of lots that we take and all that. But yeah, very low risk reward, very low premiums are required if you are maintaining the hedge versions as it is. So it's completely hedged, risk defined strategy, Batman strategy for the weekly Nifty for the next monthly expiry is coming. Let's just wrap up right for the last week of 2023. So it was a very volatile week at the top, but finally managed to close negative. Right? Not too much negative as well, not too much negative, 0.5% or 1% less than that. Basically, it paused 7 weeks of more than Nifty at least, right? And 4 weeks of more than Bank. So, but the correction is only less than 3%, right? Remember, we had the 25 to 26% rally from the very swing low where this rally has started actually, right? To summarize from the bull side, so green news markets since 8 weeks plus, index, the momentum, the trend, they're still in bullish zones and not slipped inside yet. Both time frames, medium and short. The VIX is still less than 15, which is long regime. Right? So across the different sectors, we have leaders that's there. We have leading stocks in the heavyweights. So that's possible. It all gives the bulls that this is just a small pause and the correction of 3% is adequate, and then the next leg of the up move begins is what they would hope for. But for the bear side, the VIX is not cooling off much. The fear that it is fear of claustrophobic behavior, the fear of heights. It's on the very top without much correction, 3% correction, 13% moves, and 25% rally and all that. So that fear of height is still there. That's what VIX is not pulling off. Fyers has turned sellers, right? And momentum is seen falling since the last previous week. It's falling. Will it slip and get into the sideways? The price action is not that great. Bearish patterns are really formed. It's on the very top of the Fibonacci 78 extension and also the trend line channel top. When you guys start to begin contraction, no longer expansion is there. Oil is spiking up slightly, gaining momentum after having slipped in the bear zones. Candlesticks are bearish overall price action if you see the indices. So all this gives the bears a hope that there is a retracement coming in from the top. So basically 70 consolidation ended, got paused, up to the very top. All this line correction of 3% has happened. There is potential for more retracements or corrections, or they call it, after such big vertical move. So there is a probability that the bull trap can come in again. There is a probability that consolidation comes in, but how long consolidation may stay, how big the consolidation, the retracement will be there if the consolidation turns into retracement. How long it will stay before the next breakout that happens? All these are questions in front of us, but we can only study charts and then talk about probabilities and levels and manage your risk. So I have a mild bearish view to a neutral view, the fact that there is interest that is due. Otherwise, charts are definitely, technically there is nothing but bullish view. Okay, on the top, there is potential that more breakouts can happen. Absolutely bullish with respect to indicators and momentum, all that. Corrections are due and it has to come in. No, global cues can suddenly turn bad as of now. Inflation, interest rates have cooled off, but it can turn worse. Recession fears and all that can come back in a time. COVID war and all this could create black swings anytime, so always get your positions. That's all I can do. Levels for next week is 2850 to 21600 on the Nifty and 46500 to 48500 on the Bank Nifty. So as long as this 21,000 and 47,000 on the Nifty is maintained, then there is a hope that there is some consolidation. But otherwise, it may be corrections that may be extending to 5%, 10%, 50%. No. As of now, the IB2 blind volatility is fixed to the whereas volatility is actually there. Let's see, it's not that Fyers, slightly slipped over the mid March, so it's not that much in favor as it was last week. Yeah, so always hedge your positions, don't carry overnight naked positions, and especially the derivatives and options. Right? Completely hedge your positions, and then also you can use this every dip that comes in this and taking it as an opportunity to buy SIP mode of quality stocks. And also rental incomes can be there for options trading as well, right? Against your investments. So you can have rental incomes that you can buy covered calls and cash secured puts and all that. Check out the option strategies playlist and learn that. That's all I have. I have a mild bearish to neutral view, although technically the charts are bullish. For the next week, consolidation may be what may be happen. Market has shown, given the signal that it's a small pause, there is less likelihood that the last week of December, where the Fyers are not present, there is a breakout that can happen. Maybe consolidation, or worst case can be a further more correction. So get ready, manage your trade plans accordingly, and then that's all. So if you have not subscribed and watching this, please subscribe and share to friends and colleagues. Put in your feedbacks and share so that it reaches out to maximum. And we have social media channels, Twitter and all that, where we post regularly technical analysis. May be helpful for you. Subscribe to that as well. And that's it. All the best wishes, and have a wonderful year ahead, 2024. Happy trading, happy learning, happy investing. Bye bye.